Imagine this. You wake up one morning and find that the US dollar, the undisputed king of global finance for nearly a century, is starting to look a little less mighty. All around the world, countries are quietly making a shift. They're trading oil, goods, and services in their own currencies, building new payment systems, and getting ready for a future where America's financial power isn't the only game in town. It might sound like science fiction, but this change is happening right now, slowly but surely. For over 70 years, the US dollar has been the bedrock of the global economy. It's the world's reserve currency, which means central banks everywhere stock up on it. International trade is priced in it. From oil barrels to container ships, global debt is issued in it. This has given the United States some pretty incredible advantages. We can borrow money at lower interest rates, run massive budget deficits without immediate disaster, and use financial sanctions as a powerful tool in foreign policy. When you control the currency that everyone needs, you have a huge say in how the global financial system works. But things are starting to change. A quiet rebellion is brewing, led by a group of major emerging economies known as BRICS: Brazil, Russia, India, China, and South Africa. These nations are actively looking for ways to break free from their reliance on the dollar. They're ramping up trade with each other using their own local currencies, strengthening economic ties and exploring alternatives to the Western-dominated financial institutions that have run the show for so long. What really kicked this into high gear? The heavy sanctions placed on Russia after the invasion of Ukraine. This was a massive wake-up call for many countries. It showed them just how vulnerable they were. If access to the dollar system could be cut off overnight as a political weapon, then depending on it was a serious risk. Financial dependence suddenly looked a lot like financial weakness. Many nations started thinking, if it can happen to Russia, it could happen to us. So the BRICS countries, despite their different political systems and economic models, found a powerful common interest, building a more multipolar financial world, a world where the dollar isn't the only option, but one of several. A world with more balance and less dependence on a single nation's policies. Together, the BRICS nations are a force to be reckoned with. They represent over 40% of the world's population and a rapidly growing slice of global GDP. China, the economic powerhouse of the group, is already the world's largest trading nation, and its currency, the yuan, is slowly gaining traction in international markets. India is a rising economic giant. Russia is a major energy exporter. Brazil is an agricultural superpower. South Africa is a key player on the African continent. Their collective economic weight is undeniable. They're not just talking, they're taking action. The new development bank, also known as the BRICS Bank, was created as an alternative to the World Bank and IMF, offering loans for infrastructure projects in member countries, often in local currencies. They're also developing a new payment system to bypass SWIFT, the global messaging network that facilitates most international transactions and is largely under Western influence. If they succeed, it would allow them to trade directly with each other without ever touching the dollar. So, what does this all mean for the future? Is the dollar about to collapse? Probably not overnight. The dollar's dominance is deeply embedded in the global financial system. Trillions of dollars in assets are held by central banks, companies, and investors worldwide. There's no single currency ready to replace it just yet. The euro has its own challenges, and the Chinese yuan isn't fully convertible and lacks the trust that the dollar enjoys. However, we are moving from a unipolar world, dominated by the dollar, to a multipolar one. The dollar will likely remain the most important currency for the foreseeable future, but its share of global reserves and trade will probably decline. We'll see the rise of regional currency blocks, where the yuan dominates in Asia, the euro in Europe, and perhaps a new BRICS-backed currency in other parts of the world. This transition won't be smooth. It could create financial instability and increase geopolitical tensions. For the average person, it might mean more volatility in exchange rates and changes in the cost of imported goods. For the United States, it means the exorbitant privilege of having the world's reserve currency might start to fade, forcing a rethink of its economic and foreign policies. The bottom line is this: The global financial order is being redrawn. The era of unquestioned dollar dominance is slowly coming to an end. It's not a sudden crash, but a gradual erosion. A question that would have sounded crazy a few decades ago is now a serious topic of discussion. In finance ministries and central banks worldwide, is the age of King Dollar finally drawing to a close? The answer to that will shape the 21st century. Have you heard the news? The US dollar is dead. The BRICS nations, Brazil, Russia, India, China, and South Africa, are supposedly launching a new currency to take it down. Headlines are screaming about the end of an era, a financial apocalypse for America. It sounds dramatic, doesn't it? Well, today, we're going to cut through that noise and find out what's really going on. Is the dollar's reign actually over, or is this just the biggest economic myth of our time? Let's get into it. First things first, let's address the elephant in the room. Is the dollar really being replaced tomorrow? The short answer is a big, fat no. But before you click away, the real story is far more interesting than a simple yes or no. The idea that the dollar is losing its grip isn't coming out of nowhere. For decades, it's been the world's undisputed king. Countries hold it in their reserves, oil is priced in it, and international trade overwhelmingly uses it. This gives the United States what's called an exorbitant privilege. Essentially, we can print money that the rest of the world is happy to hold and use. It's like having a global credit card with an almost unlimited spending limit. This privilege allows us to run massive deficits and finance our national debt more easily than any other country. So what's changing? Well, think of it less like a sudden revolution and more like a slow, creeping shift. The process is called de-dollarization, and it's not about finding a single replacement for the dollar overnight. Instead, it's about countries looking for alternatives for a plan B. Why? A few reasons. For one, the U.S. has increasingly used the dollar as a tool of foreign policy through sanctions. If a country falls out of favor with Washington, it can be locked out of the global financial system. This has made many nations, even allies, a little nervous. They're thinking, what if we're next? It's a powerful wake-up call, pushing them to find ways to trade without relying solely on the U.S. system. Enter the BRICS. This group of major emerging economies now represents a larger share of the global economy than the G7, the traditional club of wealthy nations. They've been openly discussing ways to trade more in their own currencies, like the yuan, the rupee, or the ruble. They've also established their own development bank as an alternative to the World Bank and IMF, which are largely seen as U.S.-led institutions. This isn't about creating a single BRICS currency just yet. That's a logistical nightmare we'll talk about later. It's about building a parallel financial universe, one where the dollar isn't the only star in the sky. But let's be realistic. Dethroning the dollar is way easier said than done. Its dominance isn't just about the size of the U.S. economy. It's built on a foundation that no other currency can currently match. Think about it. The U.S. has the deepest, most liquid financial markets in the world. You can buy or sell trillions of dollars in U.S. Treasury bonds in an instant. This provides stability and reliability that global investors crave. Then there's the rule of law. U.S. courts are trusted to enforce contracts, which is a huge deal in global finance. Add to that America's military might, which has historically underwritten global trade routes, and decades of built-up trust. No other currency, not the euro, not the Japanese yen, and certainly not the Chinese yuan, offers this complete package. Let's take a closer look at China's yuan, which is often touted as the most likely challenger. While China is an economic powerhouse, its currency has some major roadblocks. The yuan isn't freely convertible. The Chinese government strictly controls how much money can flow in and out of the country. For global investors, that's a massive red flag. Imagine putting your life savings into a bank account you couldn't freely access. That's kind of what it's like. There's also a lack of trust in China's legal and political system. Could the government suddenly change the rules? That uncertainty is a deal breaker for a global reserve currency. And what about the BRICS alliance itself? While powerful on paper, it's not exactly a band of best friends. India and China have serious border disputes and geopolitical rivalries. Brazil's political landscape is famously volatile. Russia is isolated due to sanctions. Getting these diverse countries, with their own competing interests and different economic structures, to agree on a unified financial framework, let alone a single currency, is an incredibly tall order. It's like asking your 5 most competitive friends to share a single bank account. Good luck with that. So, if an immediate collapse is off the table, why should we even care about this? Because even a slow erosion of the dollar's status has huge consequences. This is the real story. As more trade happens outside the dollar system, demand for dollars will gradually decrease. This means the U.S. could find it harder to finance its massive national debt, which is currently over $34 trillion and climbing. Right now, countries around the world buy U.S. Treasury bonds, effectively loaning us money. But if they need fewer dollars for trade, they might buy fewer bonds. What happens then? To attract buyers, the U.S. government would have to offer higher interest rates on those bonds. Higher interest rates for the government mean higher borrowing costs for everyone. Your mortgage, your car loan, your credit card debt, it could all get more expensive. It would also put pressure on the government's budget, forcing difficult choices between cutting spending, raising taxes, or just printing more money, which risks stoking inflation. That exorbitant privilege starts to look a lot less exorbitant. Essentially, the U.S. has been playing the game of global economics on easy mode. De-dollarization is like the world slowly switching the difficulty to hard. It won't be a sudden game over, but the challenges will become much more real. America's ability to project power and influence around the world is closely tied to the dollar's dominance. A shift in financial power could lead to a shift in geopolitical power, creating a more multipolar world where the U.S. is just one of several major players rather than the undisputed leader. So the real takeaway isn't that the dollar is dying tomorrow. The story is about a world that is hedging its bets. It's about diversification. Nations are waking up to the risks of putting all their financial eggs in one American basket. They are building new systems, testing new partnerships, and preparing for a future where economic influence might be more spread out. Think of it like an investment portfolio. You wouldn't put all your money into a single stock no matter how great it seems. The world is now applying that same logic to currencies. The conversation about de-dollarization is, in itself, a signal. It tells us that the global mindset is changing. The question is no longer if. The world can imagine alternatives to the dollar, but how that gradual shift will reshape the balance of power in the coming decades. Dominance in global economics is never permanent. It evolves. The British pound ruled the 19th century. The U.S. dollar ruled the 20th. What will rule the 21st? It might not be a single currency, but a collection of them. And how the United States adapts to this changing financial landscape will define its place in the world for generations to come. The dollar isn't dead, but it is being challenged, and the outcome of that challenge will affect all of us. Thanks for watching. If you found this breakdown helpful, make sure to hit that like button and subscribe for more deep dives into the forces shaping our world. Let me know your thoughts in the comments below. Is de-dollarization a real threat or just a lot of hype? See you in the next one.